Hello and welcome. You're with us here on Business Today. I'm Abha Bakaya. Here are the day's top stories. The rupee weakens past 80 to the dollar for the first time, recovers to 79.96 after the RBI intervenes. The upcoming US Fed Reserve meeting and firm crude oil prices continue to weigh on sentiment. Domestic currency down 7% year to date. It's another choppy session on Dalal Street. Indices managed to end in the green despite global headwinds. Sensex surges nearly 250 points. Nifty top 16,300. Global crude oil prices cool slightly after an overnight surge. Brent remains above $105 a barrel. Traders look to the US Fed for rate action as the next trigger. Reliance Jio leads the race for more subscribers for a second month in a row, adds over 31 lakh subscribers in May, taking the total mobile customer count to nearly 41 crores. Bharti Airtel takes its total tally to 36 crore by adding over 10 lakh subscribers. Vodafone Idea loses 7 lakh customers in May. Metals and mining major Vedanta announces second interim dividend of 19.5 rupees per share. Dividend payout will lead to an outflow of 7,250 crore rupees. India's largest FMCG company, Hindustan Unilever, posted strong set of Q1 numbers. Net profit rises 14%, domestic volume growth at 6% versus a poll of 2 to 3% growth. Finance Minister Nirmala Sitharaman takes to social media to expose political hypocrisy on GST, says the same political parties opposing GST on food items today had unanimously approved the move in the GST Council meet last month. The rupee has finally breached the crucial 80 mark against the dollar. The Indian currency slipped to 80.06 in trade today before recovering 10 paise to close at 79.96. The fall in the rupee is on the back of continued selling by foreign institutional investors. The rupee is also under pressure and continues to be so over the last few weeks due to high crude oil prices.
For the tens of thousands of students headed out to colleges in the US in August, the timing could not have been worse. Not only have prices of air tickets zoomed in the past few months, their fee has also shot up considerably since they applied, probably nearly a year ago. The overall annual expenditure at a good college in the US is around $50,000 a year. For families paying this fee a year ago, it meant an outgo of 37,30,000 rupees. Now they have to shell out 40 lakh rupees. For the rupee, which has been on a decline against the dollar, the fall has been particularly steep in the past 1 year. Nearly 5.5 rupees compared to 16 rupee fall over the past 5 years and 25 rupees over the past 10 years.
So why is the Indian rupee falling so rapidly? The answer lies in the fact that interest rates have been hiked in the United States, making the dollar a very attractive option for investors. We are seeing that investors across the world are now pulling their money and pumping it behind the dollar. In fact, the war in Ukraine is also one of the major reasons why we are seeing the rush towards the dollar, which is in fact impacting India, and we are seeing the drop in the rupee, which now stands at close to 80 per dollar.
So why is the rupee falling so rapidly? The primary reason is hike in interest rates in the US, making it a more attractive investment for institutional investors all over the world. These FIIs have withdrawn massive amounts of money from the Indian equity and other markets and invested them in the US, boosting the dollar against all other world currencies. The war in Ukraine has also fed to an overall uncertainty driving investors towards the dollar. Last year, FIIs withdrew more than 91,000 crore rupees from India, and this year, the withdrawals have zoomed to more than 2,26,000 crore rupees. However, the Indian currency is still better off than many others across the world. This year alone, the dollar has strengthened 20% against the Japanese yen, 13% against the British pound, 11% against the euro, 7% against the Chinese yuan versus 7% against the Indian rupee. Indian industry honchos also tweeted about the rupee, with top banker Uday Kotak commenting on the power of the US dollar. Anand Mahindra also put in his bit by saying that even as US influence declines globally, the dollar was still the currency of safety. Meanwhile, it is the Indian consumer who will face the brunt of a depreciating rupee. A weaker rupee massively pushes up the bill for imported crude oil, with India imposing 85% of its total needs. This puts pressure on the government to raise fuel prices, something it has been avoiding till now at the expense of its fiscal health. Bureau Report, Business Today Television.
That was all about the impact of the rupee on the consumer. How will the slide impact Indian industry? My colleague Sakshi Batra takes a closer look.
Well, that's right. The rupee free fall continues as it has declined over 7% this year so far. And here is how the key sectors of the economy are getting impacted with this. There are many which are feeling the heat and others which are getting benefited, like the export-oriented sectors. So let's begin first with those sectors that are benefiting first. IT companies are the biggest gainers of the falling rupee as they bill most of their clients in US dollars. About 60% of the overall revenue for the IT sector comes from the US. Next comes the pharma sector, which again is a net gainer as it is a big exporter of medicine. So the exporters to US stand to gain the most. Next is the tea industry. India exports nearly 230 million kilograms of tea, or around 16% of what we produce in a year, to countries like Russia, Iran, US, UK, Germany and Japan. And due to rupee depreciation, profits for this sector are expected to rise by 5 to 10% this fiscal year. But there are many sectors which may be adversely impacted, just like the oil and gas sector, which is the most adversely impacted as India imports over 85% of oil and half of the gas that we consume in a year. Now, purchase costs will rise for crude importers like IOC, BPCL, HPCL, and their margins will take a hit if they are not allowed to pass through the impact. Next is the aviation sector. About 60% of the cost for these companies, including aircraft delivery, payments, expat salaries, also fuel uplift for international flights, all are in the dollar terms. And the falling rupee is raising the cost burden for them at a time when the fuel prices are already at a record high. Depreciating rupee will further impact their profitability, and airlines will also make the overseas tickets more expensive. Now, the key raw materials like crude and palm oil derivatives are imported and account for nearly half of the input costs for the FMCG sector also. And a lower rupee can lead to their margins getting eroded. Even if that they have done the price hikes, FMCG companies now will need additional 15% price revision just to maintain their margins. What all of this means ultimately is more pain for consumers like you and me.
Now, the Indian rupee has moved into its 80s and the Reserve Bank of India has stepped in to arrest the fall of the Indian currency. It will, however, take some time for results to be seen. Siddharth Zaravi, Managing Editor of Business Today TV, spoke to R. Gopalan, former Economic Affairs Secretary, about the rupee rout that we're currently seeing. Listen in to an excerpt.
The big headline really is the rupee breaching 80, and that's a seminal moment in some ways. People are saying that India turns 75 as a republic and the rupee has hit 80. Your initial comments on this before we move on to the how and why.
I believe, Siddharth, thanks calling me. I believe that this depreciation was something which had roots elsewhere, not partly in the country's, following of economic policies, but mostly on what was happening outside the country. Basically, there was a shortage of dollars in the last 2 months in the international market. And India, it is easy, high liquidity is there of dollars in India, but it is easy for people to take dollars out of this country. And you had other issues relating to the interest rates getting raised in US and those other issues which came about. And people started looking at how they can have higher arbitrage and higher safety for the financial assets they have got. And that has led to this kind of a flow outside the country of dollars. And this is something which is influenced much more by international events, to some extent by our own action, but mostly due to international situation.
Mr. Gopalan, I'll try and do a rapid fire round with you of questions which are there in the Aam Aadmi's mind really with regard to the rupee. The first question, Mr. Gopalan, is it a bad thing for our currency to depreciate?
Depreciation has its advantages and disadvantages. Advantages is that our exports become, very favorable. It becomes competitive. As far as imports are concerned, they become very costly. They can put up inflation as a result. And depends on how we are able to use fiscal and monetary measures to handle this. This can have a very difficult effect as far as the economy is concerned.
At the end of last year, $1 was equivalent to 74.5 rupees, and by now the 7th month, and we still have 10 days or more for this month to end, we have now touched 80. Is this sharp depreciation on account of only external factors?
To a great extent, it is on account of external factors. As I mentioned to you, the interest rates getting raised as a result of inflation hitting the advanced economies. People understood that interest rates have to be raised, which means that the money has to flow outside for people to make arbitrage opportunities. Second, obviously, the Ukraine war was something which really made people think that we should go to safe assets investment at this point in time, because they did not know what would be the effect of this Ukraine war on various other economies, especially developing economies. And therefore, people thought that it is better that we are able to take our assets to safer places. And dollar at this point being the international reserve money is a better place for people to invest.
One of the other points that is there in the debate is the political opposition blaming the government of the day for so-called mismanagement of the rupee. The question I have for you, could the government have done anything else with regard to managing the depreciation of the Indian rupee?
If you ask, in hindsight, everybody becomes very wise, Siddharth. And if you look at it as if inflation had been contained in a manner which is much more helpful. For instance, we are having 3 months of 7.1 and 7.03. If we had ensured that the inflation did not rise so much, and if we had used interest rates as a policy instrument to ensure that inflation had not, gone up so steeply, maybe that would be a comment one can really make. But once again, we think that, these are all in hindsight, everybody is wise. But comments are that if interest rate regime has managed the inflation uptick, even before the Ukraine war took place, even before the commodity prices were rising, and there were pass-through effect of those in the Indian economy, those would really push up, this did push up inflation. But inflation, the levels were high, but then rate of growth would have come down as a result of the fact that prices started stabilizing in the international market. And therefore, I would think that at this high level of inflation, probably before inflation getting entrenched and unhinged, it's better that we would have acted with little bit more alacrity. But once again, this could be a matter of 3 to 4 months and not more than that.
You say that it could be a matter of a few months. My next question is, the currency is really managed by the Reserve Bank of India, and the stated objective is to manage unusual volatility in the currency. The RBI does not have a target for the rupee when it comes to its exchange rate. My question is, how would you describe the actions taken by the RBI as far as currency management is concerned? Was something wanting, or is this what the RBI could really have done?
One should look at what is the current situation. Is it really bad? And then you should, ask these questions. Today, my view is that it's not as bad as it was in 2013, when the taper tantrum, took place. The economy is really, stable. The growth prospects are very, very good at this point. Probably the highest growing developing country in the world, expected to grow. We have good reserves availability is there. So with all these basic strengths in the economy, the steps taken by the RBI at this point in time, along with steps taken by the government, I think are probably the best. It's not an overreaction. It is, in my view, a reaction which is commensurate with the kind of strengths and signals which we are receiving from various parts of the economy and including international scenarios.
So, Mr. Gopalan, the current phase of depreciation in the rupee is not on account of something being wrong fundamentally with India's economy, our macroeconomic policies. And I'm reminded of what happened between 2004 and 10 when the rupee moved from 45 to nearly 60, and now it has moved from 60 to 80 since 2014 really. Do you agree with this view that people in the government are saying that this is not the rupee's depreciation, it is actually the dollar's strengthening and nothing is wrong with the Indian economy as far as the currency movement is concerned?
Some amount of depreciation is bound to happen because of the inflation differential between the rupee and the dollar. So that should normally take place. Now, my view is that, barring that, anything which is found to be in excess is something not to do with what our economy has or our steps have been. It is more due to how the dollar has changed over a period of time, or the expectations on the dollar, expectations of the economy, expectations of inflation in US and other countries, the expectation of recession and those kind of things which are now being talked about. These have actually accentuated the slide even further.
Mr. Gopalan, on this point, before I ask you a couple of final questions, are you really telling us that no one really failed? It was something that was outside the hands of the government and the macroeconomic authority as well as the currency authority, which is the RBI, and it is what it is, and this was bound to happen?
As I mentioned, Siddharth, that there were issues relating to how soon you could have increased the interest rate to contain inflation. The core inflation was sticky for quite some time, and the headline inflation was going up, but there was once again a big gap between the WPI and CPI, which was also a matter of worry. So, if we had raised interest rates a little earlier, maybe 3, 4, 5 months before, when the commodity prices were high, tending to be high international markets, before the Ukraine war, hit us, probably we could have, not seen this kind of a higher depreciation as we are seeing now. But once again, this is a matter which is counterfactual, and therefore anybody can be wise in a counterfactual situation. So I would still think that this has been handled, barring this particular one I mentioned. The entire episode, I believe, has been handled very well.
The Finance Minister, Nirmala Sitharaman, took to Twitter today to defend the government's move to impose GST on specified food items like pulses, cereals and flour. The decision was slammed by the opposition benches in Parliament, who accused the government of being anti-poor. According to the Finance Minister, when GST was rolled out, a rate of 5% was made applicable on branded cereals, pulses and flour. This was later amended to tax only such items which were sold under registered brands. However, according to the statement, there was rampant misuse of this provision, with states and trade organizations seeking a uniform GST on all packaged commodities. The FM said subsequent changes to GST rules were made unanimously by states whose ruling parties were today rallying against the changes. Sitharaman stressed that the much-needed changes were crucial to plugging tax leakages. Just a little over 10 days to go to the tax filing deadline. Most probably you've already filed them. For those who haven't, we have a little word of caution. Ensure you look at 2 documents before anything else. Any mismatch with the annual information statement or the taxpayer information summary could land you in hot soup.
The Income Tax Department is watching you. Every rupee you earn, every pie you spend, every investment you make, and every profit you earn, the Big Brother is watching you.
And it's not some dystopian society that we are talking about here. Access your income tax profile on the website and you will be shocked with the kind of information it has about your earning, your spending and your investment habits as well. Your entire financial profile is there for you to see on the website, specifically on what is called the Annual Information Statement.
Launched in November last year, the Annual Information Statement, or the AIS, basically contains details of all financial transactions made by you in a financial year. It has details of your salary and other incomes, including interest from savings and FDs, dividends, sale or purchase of shares and mutual funds, and even your credit card expenditure. Now, some of this information is also reflected on your Form 26AS and most likely has been auto-inserted in your income tax return. But as a taxpayer, it's incumbent on you to ensure that the information being finally submitted by you in the IT return is correct and complete. Because if there is any deviation between the AIS and the return, you may be soon getting a notice from the IT department.
While there may be no penalty for the mismatch, the notice certainly increases your worries and the paperwork as well. You will need to satisfactorily answer all the queries also raised by the department. So avoid all this by keeping a printout of the AIS besides you when you file your IT return this time. Sakshi Batra for Business Today TV.
For a while, we've heard news about how Netflix is not okay with users sharing their passwords and accounts with friends all over the place. Netflix is testing a new way to end the free password sharing business. The company recently launched an add extra member option for users living in Chile, Costa Rica and Peru. The feature requires people outside your home to pay to use your Netflix account, which isn't the case in India just as yet. The video streaming platform has now announced a similar add a home feature in some more regions. Netflix hasn't revealed any details about charging users in India or sharing password outside their homes just as yet. But since this is a company-wide plan, such charges are meant to be introduced in the country in the days to come. And that's where we leave it on the show today. Thanks so much for watching.